This is Trading Day, the close.
Well, a warm welcome into the show. Nice to have your company on live at 5 with our top stories. A positive end to the day's trade. 5.36 billion washed through the system, a 5-month high struck. That's pretty darn good performance, thanking you. And all in clover, the major sectors we monitor having green on screen without exception. Challenger, take a bow. You were one of the best performers on the 200 after coming out with a rise in assets under management for the September quarter. Also making headlines, Rio in focus with mixed results for the September quarter. Iron ore shipments have beat on expectations, with copper production, though, missing the mark. The $8 in focus, the Reserve Bank minutes from its last meeting showing increased confidence in the outlook on the economy, despite those lingering concerns over high household debt. So a broad-based rally on, and Adam Dawes dancing towards his seat on live at 5. Adam, welcome into the show.
Thank you.
Good val as well. I mean, 5.4 billion, nothing to sniff at on that measure either, right?
It's a beautiful chart. If we pull up the ASX 200, it looks beautiful. We're really now starting to get some steam ahead of us, and that volume is a clear indicator that we're seeing that, and that there you go. There's that sort of breakout there, which is great.
Okay, just to clarify as well, Coppo's crunched the numbers at Bell Potter, 5th consecutive rise. The last time we had this in a row ended up being 6 indeed. So we went one further still. That was Easter this year, and that was when the 200 rose in late April, some 152 points, or roughly 2.6%. So very much that echo of buy the market, then as now, right?
Yeah,
as Coppo would say.
Absolutely. It's interesting that we saw just going to the US, we saw 10 days ago, we saw an all-time high in the S&P 500, but we've seen the VIX at an all-time low.
That's a worry.
So are we getting a little bit, dislocation, we're getting a little bit complacent. I think here in Australia, we've got the Chinese story, which is really sort of playing out, which is going to flow through to our market. Yeah. It's about time we started to make a bit of a move as well. But I don't seem to see us complacent. I still think we've got a lot of worry. North Korea, there's a lot of worry out there. Europe, what's happening here in the housing market and things like that. So there's a lot more climbing that wall of the worry, or that worry that we have is going to make it harder for this market to keep moving higher. So any kind of dislocation that we have here in the Australian market, we'll be straight back down there again. But it's great to see today, really is. Okay, well, let's talk commodities and their contribution to all of this. Copper rallying 3.5%, breaking out to a 3-year high. Now, so far in October, rallying 9.75%. That's the best monthly rise in 11 months. On that metric, let's take you live to Pete McGuire from XM.com. ensconced in our Sydney CBD studio. Pete, welcome to you. That's on a tear, if ever there was a story to tell, is it not, for Dr. Copper? But even that's in the shade alongside nickel, up 13.3% so far in October. What to make of this? What's the driver? Are we talking China, China, China?
Well, good afternoon, Carson. In a lot of ways, I think we are. And also, you've got to think of the global economy. If you look at those steel numbers, it's about a $900 billion industry. And they're saying that the market will be up around about 4% this year, 4.4 and 5.7 next year. So overall, you're taking those base metals up with it. Copper's had a lovely uptick, and certainly nickel has as well. So you roll it across, great for traders, and of course, I think the demand picture is not going away.
No, true. You've got thoughts on that one?
Well, sorry,
just come in.
Commodities certainly, but talking about nickel, Western areas got a shorts plunge on it today. We saw them, the short in that sector is easing, so across the board. So IGO, hence why it was up, and Western areas also those shorts. However, on the other side, Rio is getting an increasing number of shorts coming back onto their stock. So, but the commodity market is obviously playing into the shorters are saying that nickel could be moving higher.
And FYI, Rio had a 4.5-year high today. So to your point on gathering shorts, someone's going to be burnt.
And I hope it's the shortest. But anyway.
Well, Pete, you've got to view on that one.
Short sellers, Carson. Well, I think also you've got to think of where crude's traded, and that's also had a very, very strong run-up in this month. And that's been on the back of precious. It's been on the back, the back of base. And I think they're on, they're in even Steven. The move has certainly been very, very strong. US dollars had an uptick, and as far as that dollar index, but there seems to be more momentum across the energy sector. And I think it's dragging a lot of those particular markets, and of course the barometer itself being copper up.
It's like the 1812 overture with the cannon going off, because overnight an oil rig explodes in a Louisiana lake.
Yes.
So it's almost, it's like that kind of dramatic...
well, they're highly combustible, industries to be involved in, and it's not unusual to see something like that. God bless, hope everyone's okay, but it's...
True.
They're pretty dangerous things to be around, oil wells.
Who are we paying more attention to, Pete? OPEC, who talk about a 5-year healthy demand curve on crude, or Baker Hughes that clocks a fall to the measure of 5 rigs to 743 this week? Which for you is the kind of the more telling mood music right now?
Well, I think I look at the OPEC situation. I also look at what's happened over the last couple of days as far as Iraq and that Kurdish region, in the sense of Peshmerga troops. The Iraqis wanting that particular Kirtek oil field. I think that's the ultimate strategy, to take it back on board. Yeah. And there's certainly that global overhang, and we're very conscious of that as far as OPEC. So, while Baker Hughes is a number for the US, the producers I don't think will take too long a time out. It may be just some little rebalancing or, a little bit of minor adjustments, but the overall picture at $51, $52, $53 for WTI is going to force a lot of those producers back on board, Carson.
You say Kirtek, others say Kirkuk, but the kind of... No. I mean, what's indisputable, though, is hard numbers from China this week. Do we get a justification of the rally on IP and, importantly, GDP from the tiger economy? Never mind the pomp and pageantry of Beijing.
Well, yeah, you have that twice a decade, meeting, and I think overall the Chinese economy is moving along quite briskly. They're saying it'll be 7% this year, or 7% next year, the forecasted growth. Of course, when you look at the the steel industry, and China's numbers there are just breathtaking as far as consumption. So, overall, it's performing probably better than expected, and that's certainly, from a demand picture, energy, metals, the consumption line's not changing, agriculture. So overall, I think, predominantly, the world's not a bad place to be economically at the moment. There are some hiccups there, but a lot of them are doing quite well.
Yeah, Pete, just going back to oil, and I know that we had a fair few long positions, sort of a couple of months ago. Has that started to unwind, or do you still see more sort of people going long on oil?
Well, the money managers and hedge funds have jumped all over it, Adam, and they haven't backed off, as far as my understanding. Okay. From that CFTC numbers, and the reports coming through. It's been a very, very solid trade for them. They'll probably stack even longer positions now, leading up into that OPEC meeting. A little bit of geopolitical. They ran the hurricane risk side of it as well. So all of that's pushed it higher, and it's been a glory trade over the last, I would say, probably 3 to 4 weeks, and it probably will continue. You've got that next meeting on the 30th of November in Vienna. So in turn, let's just see what happens. The geopolitical, you've got that wild card there as far as President Trump and Iran also, those sanctions that could be reintroduced. So, it's a little bit of a wild keg at the moment, the old Middle East.
The other thing we're not looking at, we're getting blindsided day after day by lithium, and the runaway story just the other day, for obvious reasons, of a key plank in that story domestically via evolution, for instance. However, come back to a sort of a little understood side commod, which is crucial, and that's cobalt as well. You've got to go deep into the Democratic Republic of Congo, Pete. It's one of the most impoverished, but one of the most politically volatile regions in Africa. There's a big fight being waged as we speak. You've got Tesla, you've got BMW trying to lock in stocks of this metal. It's only available in a handful of mines coming out of the DRC. And never mind everyone else. If you can't get that, you can't scale this product for EV models.
No, well, that's exactly it. I mean, you know, and rare earths as well. All of those situations and conditions as far as miners are concerned. And then you get the big boys, you know, as far as the, you know, the producers, the BMWs, and as you just mentioned. So it's not unusual. That just seems to be the very much the flavour as far as commodities. They are rare earths. They are metals that aren't easily refined or easily found anywhere other than those particular locations. And I think that just creates even more uncertainty when you're dealing with a country that has geopolitical shocks internally. So that can, you know, greatly impact price very, very quickly. Put it something else out there, the sources are saying that you could see China buy 5% of Saudi Aramco before the IPO. So that's a little bit of news out there.
I mean, the other point is that they scrubbed the IPO altogether.
Well, it could be. I mean, you know, if they're prepared to ratchet up and they'll probably pay at a high multiple, then it's going to be interesting what value that puts back to the market as far as the IPO, and they might even stretch it further. So they're very strong strategic buyers, as we know, and they're, you know, navigating around the planet to see and seek opportunities and look at long range. So it's not unusual, I think, from China's appetite to control or at least be involved with producing.
Adam, your thoughts?
Well, I think that's a bold move by China to do that, but as you say, very strategic. So it would be interesting to see if they did that, and certainly would underpin the IPO coming up. So that would certainly get a lot of other investors interested in the story.
Well, I mean, of course, just recent reports out of the FT are that it could be a private placement with only doubts growing further still about merits of going public. You know, that's got to figure in people's minds. What does that do to the broader pipeline, Pete, do you imagine? No pun intended, on these energy offerings.
Well, I think overall, you know, it's still going to be a $45 to $55 trade for the Brent market. It may go a little bit higher if there's no outages, and that seems to be, there's still that global overhang, and there's plenty of production out there. You know, and you're worried about even something like, you know, the second largest producer in OPEC, you know, as far as Iraq. There's still excess capacity, and until that gets taken back or unwound, I think that it's going to be a range-bound trade, and it'll just be volatile between those two, you know, the high level and the low, and that's where the money managers jump in, and, you know, in a couple of weeks' time they could be, you know, reversing that trade. So, you know, that's just the nature of the market. They've been at this since early 14 and they haven't backed off.
True. Then again, you've got all sorts of coming out of the woodwork, 9/11 suing options on via US terror legislation for victims of that event. If you have a New York listing, more scrutiny via UK option. Certainly, are they going to see themselves, even like the financial regulator, the blowtorch on them? Are they watering down rules to let them list? I mean, so it goes. It all just gets too hot to handle. So bail is a sort of path of least resistance. Pete, thank you as always.
Thank you,
Talk to you soon. Check in and on. All right, let's move on.